Okay, let's just take a collective deep breath for a second and look at where we are. It is Monday, January 19th, 2026. If you glanced at your phone this morning, you probably thought you were still asleep and, having a very, very strange nightmare about international real estate. Because the headlines, they honestly feel like something a satire bot wrote. The President of the United States is trying to buy Greenland again. And because Denmark, I assume politely, said it's not for sale, we are now staring down the barrel of a full-blown trade war.
It does sound like a fever dream, doesn't it? It's that kind of news cycle where you have to check the date just to make sure it's not April 1st. Yeah. But you pull up Bloomberg Terminal or look at the markets this morning, I can assure you, nobody is laughing. This has moved way beyond rhetoric or, Twitter bluster. We are in very real, very dangerous economic territory.
And that's what we need to break down today. The absurdity is one thing, but the financial impact, what it means for your wallet, that's what really matters. Because in all this red ink, there's one sector that is acting very, very strangely. So today, we're generating a report on the EUA.
That's the ticker, EUAD. It's the Select STOXX Europe Aerospace and Defense ETF. And honestly, given the news, it is the only chart that matters right now.
Before we dig into the ETF itself, I need to understand the stakes. You said the markets aren't laughing. What is the actual threat? Is this just noise?
Oh, it is definitely not noise. As of this weekend, President Trump officially announced a 10% tariff on 8 specific NATO countries. That isn't a maybe. That kicks in February 1st, talking less than 2 weeks away. And he didn't stop there. The ultimatum is incredibly stark. If a deal for Greenland isn't reached, those tariffs jump to 25% by June 1st.
25% on our biggest trading partners. That's massive.
It's economic warfare. That's what it is.
And this is the part that really confused me. You look at the broader European markets, the STOXX X50, the DAX in Germany, they're all taking a beating. Everyone is freaking out. But then you look at European defense stocks, and they're hitting record highs.
It's a huge anomaly.
Yeah.
A complete decoupling from the rest of the market. While everyone else is pricing in fear, pricing in a contraction because, tariffs are bad for global trade, the defense sector is pricing in something we are calling a sovereignty premium.
A sovereignty premium.
Exactly. We are witnessing the solidification of what people are calling a defense supercycle. The market is basically saying that all this political chaos is actually bullish for tanks and fighter jets.
Okay, hold on. Before we get into the ETF and the numbers, because I saw some of those PE ratios and my jaw just about hit the floor, we have to set the stage with why. This whole geopolitical catalyst, why these specific 8 countries, it just feels random.
It's actually very specific, very targeted. The tariffs hit Denmark, obviously, because they own Greenland. But it also hits Norway, Sweden, France, Germany, the UK, the Netherlands, and Finland.
Okay, so what's the common thread there? Besides being our allies.
It's more tangible than that.
Yeah.
They all recently sent troops to Greenland for Operation Arctic Endurance.
Which was just a training exercise, right? I think I remember reading about that.
On paper, yes.
Yeah.
A joint exercise for Arctic warfare training. But the timing sent a very clear message to Washington. The administration saw it as Europe putting a do not touch sign on the Arctic. So the president is now using this very powerful, very controversial tool called the IEPA.
The IEPA, I've seen that acronym. Break that down for us. What does it actually let him do?
It stands for the International Emergency Economic Powers Act. It gives the president really broad authority to regulate commerce after declaring a national emergency.
But you usually use that against, rogue states, right?
Yeah.
Not your friends.
Exactly. Adversaries like Iran or North Korea, using it to justify tariffs on NATO allies by claiming their refusal to sell territory is a national security threat. That is completely unprecedented.
So Europe must be furious. Are they trying to smooth things over?
Not even close. In fact, the rhetoric coming out of Brussels is sharper than I have ever seen. They're calling it blackmail. And it's not just angry press releases. The EU is seriously considering activating the trade bazooka.
The trade bazooka. Okay, I'm guessing that's not the official legal term.
It's the nickname for the Anti-Coercion instrument, or ACI. The EU adopted it back in 2023, mainly with China in mind, but it's never actually been used.
And how does it work? Is it just more tariffs?
It's much faster and, frankly, much nastier. It's a rapid response mechanism. If the EU decides a country is trying to economically coerce a member state, like, say, putting tariffs on Denmark to force a land sale, the ACI lets Brussels immediately freeze U.S. access to EU markets.
Freeze access, like stop Apple from selling iPhones, Gare.
Potentially. Or they could block U.S. companies from bidding on government contracts, block investments entirely. It's designed to inflict immediate, sharp pain.
That is intense. I also saw something in the notes about a Sell America trade. Is that a real thing?
It's the financial nuclear option, but yes, it is being discussed in serious circles. You have to remember, European nations hold about $8 trillion in U.S. assets. There's talk of incentivizing a shift of that capital
Shifting it where?
into euro-denominated strategic assets, basically dumping U.S. Treasury bonds to fund European sovereignty, taking money out of the U.S. system and putting it into their own defense and energy sectors.
Which brings us right back to that market disconnect. Luxury brands like LVMH, car makers like Volkswagen, they're dropping like rocks.
Which makes sense. A trade war is a nightmare if you're Volkswagen. You lose access to U.S. consumers.
Right. But defense is soaring. Why?
It is the realization that the security architecture of the world has just changed. The market is waking up to the fact that Europe can no longer rely on U.S. security guarantees. Not when this can happen.
So the thinking is just, we are on our own.
Exactly. Defense spending in Europe is shifting from discretionary, something you do to meet a quota, to a structural necessity. They need to build their own shield. And that brings us to the EUAD.
The select STOXX Europe Aerospace and Defense ETF. Okay, let's pop the hood on this thing. Because looking at the chart, it looks like a tech stock from 2021.
It really does.
Yeah.
The EUAD tracks the heavy hitters of the European defense industry. And the performance is, well, it's staggering. Year to date, and remember, we're only a couple of weeks into 2026, it's up roughly 13.7%.
13% in 2 weeks. That's an annualized rate of
It's
a lot.
It's unsustainable math. But,
Yeah.
And looking back, it's up over 93% in the last 12 months. It's behaving like a meme stock. But these are industrial giants making actual tanks and radar systems.
One of the sources used a phrase that stuck with me, the permanent war economy. That sounds grim.
It is grim. But from an investment standpoint, it's a pretty blunt assessment of reality. This isn't just about the war in Ukraine anymore. It's about strategic autonomy. European nations realize they need to build their own gear, independent of the U.S.
And the numbers back that up. This isn't just a story stock.
Absolutely. Look at the fundamentals. Order books for the top companies in this ETF are up 15%. Their combined free cash flow just hit a record high of over 8 billion euros. And you can see it in their purchasing behavior. Just look at Norway.
What did Norway do?
They just awarded a massive £10 billion naval order to BAE Systems. Now, BAE is British. Historically, Norway might have bought American from Lockheed or General Dynamics.
But they didn't?
No. They chose a European partner.
That's a huge signal. It's like buy local, but for battleships.
It signals a real shift to intra-European procurement, keeping the money inside the family.
So who are the actual companies inside this ETF? If you buy EUA, what do you own?
It's a pretty concentrated list. The biggest driver by far has been Rheinmetall out of Germany. They're up over 200% in a year.
200%. For a German industrial manufacturer, that sounds impossible. Those stocks usually move like glaciers.
It would be impossible in normal times. But Rheinmetall makes the ammunition and the heavy armor that Europe desperately needs. They are the backbone of this rearmament. Then you have BAE Systems, who we just mentioned, and then there's Saab in Sweden.
I always think of the cars when I hear Saab.
Most people do. But the car company's long gone. Saab today is a pure-play defense company. They make the Gripen fighter jets. Saab is up 28% just in the first few weeks of this year.
Wow. And the last big one.
Dolls in France. They're huge in cyber defense and security chips.
Okay, so the growth is explosive. The story makes sense. But as an investor, I look at a chart that's gone vertical and I just think, I missed it. Or worse, if I buy now, I'm the sucker buying the top.
That is the billion-euro question. And if we look at the valuation reference section of our report, there is definitely reason for sticker shock.
Okay, give me the bad news. How expensive is it?
The EUAD is currently trading at a price-to-earnings ratio, a PE, of roughly 39x.
Whoa, 39.
Yes.
Put that in context for us. What's normal?
Well, the broader European market, the STOXX 600, trades around 19x. So you're paying double the market multiple. Historically, these kinds of stocks often traded at a discount to the market, maybe 12x or 15x.
So 39x that's tech territory. That's like paying NVIDIA or Microsoft multiples for a company that makes metal boxes.
That's exactly what it is. But the argument is that you are paying that sovereignty premium. Investors are betting these companies have guaranteed government contracts for the next decade.
I guess that's true. Defense spending isn't easy to cancel.
Not anymore. The projected long-term earnings growth for these companies is around 18%, which is nearly double the market average. But you have to be nuanced here. Not every stock in the ETF is a good deal right now.
Which one's the outlier?
Saab. We mentioned they're up 28% this year. Morningstar currently rates them as a one-star stock.
1 star, that's their runaway rating, right?
It means significantly overvalued.
Yeah.
The price is decoupled from the math. It's pure hype driving it at this point.
So Saab might be overheating?
Possibly. On the other hand, Thales and Rheinmetall still look pretty attractive relative to their growth. But here's a fascinating data point. Despite these sky-high valuations, the AI models we track give EUAD a 7 out of 10 buy rating.
Even at 39 times earnings, why would an algorithm like that?
Because the AI weights momentum and money flow very heavily, and right now the institutional money flow is enormous. This ETF is in the top 40% of all ETFs for inflows. The smart money is still piling in.
Okay, so the momentum's there. But we have to talk risks, because if this whole rally is built on the Greenland crisis, what happens if the crisis goes away?
Precisely. This brings us to the potential risks. And the biggest one has a great nickname on the trading floors right now, the TACO trade.
TACO. And we're not talking about lunch. What's it stand for?
TACO. It stands for Trump Always Chickens Out.
Ah, I remember that one.
It's a term traders coined back in his first term. The pattern they observed was that he makes a massive, terrifying threat to get leverage. The markets panic. But then, at the last minute, he signs a smaller deal and drops the tariffs.
So the risk is we're pricing in the apocalypse, but we might just get a handshake.
Exactly. If you buy EUA today at 39x earnings, and tomorrow Trump and the Prime Minister of Denmark shake hands and say, we're cool, that panic buying just evaporates. A sudden de-escalation could cause a 10 to 15% drawdown very quickly.
That's a serious risk. Is there anything else that could pop this bubble?
The U.S. Supreme Court?
The Supreme Court, how do they get involved?
Remember, he's using the IEEPA Act. There's a case pending right now on whether the president even has the legal authority to use that act for these specific types of tariffs against allies.
That's a good point, if the court rules against him.
If they block the tariffs, the catalyst for this rally disappears overnight.
So you have political risk and legal risk.
And yet, there's this strange paradox in the data. The technicals, the charts, the trends are rated 9 out of 10. Super bullish. But the sentiment, how people actually feel, is rated 1 out of 10. Fearful.
Everyone hates the trade, but everyone is buying it.
It's the classic wall of worry. The market hates the headlines, hates the instability. But capital has to go somewhere safe. And right now, safe means European tanks.
So let's bring this all together. What's the final verdict on EUAD?
It comes down to 3 things. First, the thesis. It's strong. Europe is rearming regardless of what happens with Greenland. That structural shift is real.
Okay, the long-term trend is valid.
Second, valuation. It's high. You have to accept you're paying double the market average for this growth. You are buying high, hoping to sell higher.
And third,
risk. It's volatile. The TACO trade, or a Supreme Court ruling, could trigger a sharp short-term sell-off.
So what does that mean for a portfolio? Buy, sell, or hold?
It's a buy, but with a major caveat. It's a buy for the long-term structural shift. We are moving from an era of soft power, luxury goods, tourism, to an era of hard power, industrials, defense, energy. Your portfolio probably needs to reflect that new reality.
Maybe don't bet the farm today.
Exactly. Don't go all in at the peak of the headline cycle. Keep some cash on the side. If the TACO trade plays out and prices dip 10%, that's your buying opportunity. But do not ignore the sector. The world has changed.
From soft power to hard power, that is a sobering thought to end on. We will keep tracking this as the February 1st deadline gets closer. Thanks for joining us on this analysis of the EUA.
Continue to watch for our next release.